The way I like to explain it is, let's say you put $1 in today and it's worth $3 later. With the traditional, yes, you save taxes on that dollar, but that $3 coming out later is all taxable. Versus with the Roth, the dollar that you put in is after taxes, so you pay the taxes on it. However, that $3 down the road is now all tax-free, which is a better deal.
Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Here on Saving with Silverman, let's talk about traditional versus Roth. Mark, it seems that most people don't have a really clear picture of whether they should contribute to a traditional IRA or a Roth. Let's discuss how to determine what's best for each individual out there. First of all, explain the difference between the two types of accounts, if you would.
Sure. And I'll preface this. An IRA, whether we're talking IRAs, this also applies to a 401k. It could be a 403b, a 457, a thrift savings plan, a TSP. This all works the same way. So what happens is the money gets taken and it's actually pre-tax. So the money that goes in, if you put $5,000 in this year, that's pre-tax. So you get that savings right up front. What happens is it does grow tax deferred over time. However, at some point, you have to take what's known as an RMD, required minimum distribution, which means you have to start pulling money out of that account. And when you do, that money is taxed as ordinary income. So that's kind of the old way of doing things. That's a traditional. The way the Roth works, it's kind of in the reverse. So let's say you put that $5,000 in, that's after tax money. So you've already paid taxes on that money. It's going to, again, grow tax deferred just like the traditional. However, that money, once you take it out, is going to come out all tax free. So there's a big benefit there. The way I like to explain it is, let's say you put $1 in today and it's worth $3 later. With the traditional, yes, you save taxes on that dollar, but that $3 coming out later is all taxable. Versus with a Roth, the dollar that you put in is after taxes, so you paid the taxes on it. However, that $3 down the road is now all tax-free, which is a better deal. Well, it also depends on your life expectancy and how long you've been in the plan, et cetera. But for younger folks, I think the Roth is always a better option. Or some of the newer plans that are out there, 401ks, et cetera, offer a Roth 401k where it can be Roth money, so it's not pre-tax. But I think once you've built up a lot in traditional, it makes sense to go Roth. Or if you're younger, I would certainly just go the Roth route. And even though you don't get the tax savings now, you're going to get that benefit down the road.
All of that explanation brings to mind a question, Mark. Why do you think so many people have contributed much more to traditional IRAs than Roths over the course of their lives?
Well, I think the Roths are newer. They've been around a long time, but not as long as traditionals. But I think a lot of people want that savings now. It's self-gratification, right? That's why we use credit cards instead of, paying for things when we have the money these days. So people want the benefit now. But as I mentioned in the previous example, I think it makes sense because you're getting that benefit down the road. Do you want to pay taxes on a little or a lot? And so with the Roth, you're paying taxes on a little and you're getting the tax-free benefit down the road, which if it's invested appropriately is going to be worth a lot more versus the IRA. You get the tax benefit up front, and then you pay taxes at the end when, again, if it's invested properly, that money's going to be grown substantially and you're going to be paying taxes on that down the road. So it's understanding that. And when you look at those projections, you can see that, yes, you are going to be paying more in taxes now, but you're going to be paying less in taxes later.
You're listening to Saving with Silverman with the one and only Mark Silverman. And Mark, let's look at it more closely here. Why can a Roth be so darn powerful?
Because of the fact that I just said, if you have compounding of that money's growing over time. And so you're getting it's growing tax deferred just like it would with the traditional. But at the end, all that money's coming out. There are some restrictions. You can't put the money in today and take it out tomorrow. There's a 5-year wait and some other restrictions, age restrictions, et cetera. But when that money comes out, it's all tax free. It's not going to affect any of your other situations, whether it be, your Medicare, your Social Security, et cetera. That money's all tax free. Whereas, some of those RMD payments coming out of your IRA, when you have to take those, can affect, unfortunately, your Medicare and some of those other things if your income's too high.
Now, give us an example, if you would, of someone who should contribute to Roth instead of a traditional IRA.
I would say, I'd say most people. Certainly the younger that you are, if you're just starting off, if you have a Roth 401k option available, or if you don't have any type of employer-sponsored plan, if you have the option of doing an IRA versus a Roth, I would certainly say do the Roth. I think it's a much better deal going forward. So, I'd say most cases the Roth makes sense. There are some cases where it doesn't make sense, but I'd say for most people, the Roth is probably the way to go.
Okay, let's flip that for a moment here. Give us an example of a person who ought to contribute to traditional instead of a Roth.
Somebody that's maybe a little bit older that, necessarily doesn't have as much time for that money to grow, and maybe taking that out now, paying the taxes now makes more sense than paying it later. But, there are certain cases where it does make sense not to do a Roth. But for most people, again, I would say Roth makes more sense. But again, not everybody's the same. Everybody's situation is different. That's why you need to talk to someone that knows this stuff that can tell you which is the best way to go about it.
All right. We have talked about a lot of things here in regards to Roths and traditional IRAs. And if you have further questions, and certainly a lot of people have questions out there, they'd like to have a conversation with you about them. I know that you would be willing to talk about these things with folks on that introductory phone call. What happens when they call the number that I'm going to give out here in just a couple of minutes?
Sure, Ron. So whether you call or text us, what we're going to do is you're going to get on my calendar for, like Ron said, a 15 to 20 minute introductory call with me where we can discuss your situation. I'll get to learn a little bit about you. Feel free to ask me any questions. I'll tell you a little bit about me, about my firm and our financial planning process. And then we can determine if it's a good fit. If we need to move forward, we can set up a time to meet here in the office to go through our Get Acquainted meeting and go through that process to see if everything's aligned and making sure that we can deliver what it is that you're looking for.
You've been listening to the Saving with Silverman podcast. If you have any questions at all about your financial situation, please give Mark Silverman a call. Again, his number is 520-333-7601, or go online to savingwithsilverman.com. For Mark Silverman, I'm Ron Stutz. We'll see you next time on the Saving with Silverman podcast.
The Saving with Silverman podcast is brought to you by Silverman & Associates Wealth Management, LLC, based in Tucson, Arizona. The show is available on Apple Podcasts, Spotify, Google Podcasts, and everywhere you listen to shows. Subscribe to the show on your favorite app today and never miss an episode. Just search for Saving with Silverman to find us, or visit savingwithsilverman.com to listen to past episodes, to contact Mark, and to learn more about how to make smarter decisions with your money. All matters discussed on this show are for informational purposes only. Opinions expressed are solely those of Silverman & Associates Wealth Management, LLC, and staff. All topics covered are believed to be from reliable sources. However, Silverman & Associates Wealth Management, LLC makes no representation as to its accuracy or completeness. The show shall in no way be construed as a solicitation to sell securities or investment advisory services to residents of any state other than Arizona or where otherwise permitted. Topics should be discussed with your individual advisor prior to implementation. Fee-based financial planning and investment advisory services offered through Silverman & Associates Wealth Management, LLC, a registered investment advisor in the state of Arizona. Insurance products and services are offered through Silverman & Associates, an affiliated company.